program. Welcome. We're going to be hearing from a few speakers over the course of the next hour. Please enjoy your lunch with a focus on enhancing business value and driving shareholder returns. Before we get started, I'd like to thank our title sponsor, Invesco QQQ. And whether you're in the room or watching live stream, which many people are, which is very exciting, we hope that you enjoy these conversations and engage with us on social media. I know I'm watching along on social media and engaging with a lot of people. Our hashtag is hashtag Bloomberg Invest. And with that, let's get this program started.
Please welcome to the stage Tom Digby, Head of ETF Business Development and Capital Markets Asia Pacific at Invesco.
Thanks very much, and thank you, Bloomberg, for hosting us at this event. It's super exciting for us, Invesco, to be here in the capacity that we are with Invesco QQQ as our sponsor. For those of you that don't know, we've recently cross-listed QQQ into Hong Kong, and we'll come on to what that means for investors in the room shortly. But first of all, for those that may not know, I'm going to give you a brief introduction into what is QQQ and then talk about what it brings to an investor's portfolio with the topics aligned around growth and innovation that Sonali mentioned right at the beginning. So to kick things off, what is QQQ? Well, QQQ, simply put, is an exchange-traded fund that is designed to measure the performance of the Nasdaq 100 index. So it's passive, it tracks the Nasdaq 100 index. So most importantly, what is the Nasdaq 100 index? Well, the Nasdaq 100 index, simply put, is the largest 100 non-financial firms that trade on the Nasdaq stock market. So what does that really mean for investors? Well, the Nasdaq 100 over the years has provided robust fundamentals in a portfolio. It's access to profitable growing companies with these strong fundamentals in sales, earnings and dividend growth rates that surpass S&P 500 and Russell 1000 growth indices. What has this meant to people's portfolios in the last 25 years since 1999 of existence? This has led to double the performance of the S&P 500. The S&P 500 is a very strong, robust index, and we're talking about the Nasdaq 100, which has doubled that performance in the last 25 years. So how has it done this? So it's provided access to leading large-cap growth companies that are at the forefront of innovation and technology. But what does this term innovation really mean to us as investors today in this room? Isn't that just technology? Well, with the Nasdaq 100, you're about half right. Actually, statistically, you are half right. 50% of the index is technology from a GICS sector type approach. But the Nasdaq 100 goes beyond the technology sector as much as technology we use today also does. What do I mean by that? So other companies that you'll find in the Nasdaq 100 index go across other sectors such as communications or telco, so things like Alphabet, things like Meta, things like consumer discretionary, so Amazon, Tesla. What is at the heart of all of these companies is the diversification of the business lines that they bring to investors' portfolios today. Companies that are looking to reinvest into themselves, to reinvent themselves through research and development and commitment to long-term projects that give them sustainable competitive advantages in the future. Innovation might be the most overused term in the world today when we think about the corporate world. It appears in every annual report with reference to how we're innovating, what we're innovating in, but how do you actually prove that as an investor? I think you can do that pretty tangibly within the Nasdaq 100 index. So first of all, let's take a look at the research and development spending that these Nasdaq 100 companies do. So in the course of 2024, Nasdaq 100 companies spent $16 billion in research and development, $16 billion across 100 companies. Just to give you a comparative note on that, if you take the S&P 500 and remove those Nasdaq 100 companies, the rest of them spent $1.5 billion. So we're talking about companies that have spent 10 times on themselves, reinvesting themselves, changing their business lines. To put that another way, another good stat I like to run off, is 11% of Nasdaq 100 company sales end up back into research and development for them. So put that into numbers. Every $10 I sell, I put $1 aside to invest into research and development. So where does this really dollar that end up? Well, ultimately, it goes into what this thing we call innovation. But how, again, do we measure that innovation? Let's peel back the next layer of the onion. Well, let's look at innovation in terms of patent filings. And I've got some really geeky statistics on this as well. So 63 companies in the index, so 79% of the index, filed patents in one or more 35 disruptive technologies in 2024. Technologies such as AI, wearable technology, deep learning, cybersecurity, blockchain, big data, spacecraft satellites, the list goes on and on and on. A phenomenal stat in this as well is that 45% of every patent filed in natural language processing, the technology behind AI, was filed by a Nasdaq 100 company in 2024. 45% of global patents. That is a huge, huge number. But these are not just short-term investments that are accretive to earnings in the next quarter or the next year. These are investments for 5 to 10 to 15 years down the road. I'll give you a great example of this. In the last 3 years, companies such as Google and Amazon, cloud computing has suddenly become accretive to earnings as driving fundamentals of these companies. The first time Google mentioned cloud computing was at a conference in 2007. That's when they started their investment. It's taken them 15 years to actually drive fundamentals, to drive this research and development, to actually make stronger earnings, make stronger growth for Google to do that. And we're going to see the same thing in AI, no doubt. So AI is moving at the moment from social to cross-sectorial and impacting areas such as robotics, pharma, biomedical. We're seeing some of the companies within the index already who are looking at how do I generate energy efficiency within AI whilst I'm powering my data centers. So we're seeing companies now filing for new wind, solar, lithium batteries. All of these patents continue to increase day after day. So in a world where the short term remains very uncertain, investing in the long term through future innovation has never been so important. And now it's even easier to do for us investors in the room with the listing of QQQ in Hong Kong. It's a direct cross-listing into the Hong Kong Stock Exchange of the QQQ US vehicle under stock code 3455, available in Hong Kong dollars, US dollars and renminbi for our investors here today. That's enough for me. I'm going to pause there. We're downstairs in a booth. If you've got any questions on the index, innovation or growth going forwards in the US, please feel free to contact myself or any of the Invesco team dotted around the room today. Thank you very much for listening.
Please welcome to the stage David Soy, Head of Index Research APAC at Nasdaq, for a conversation with Bloomberg's Rebecca Sin.
So before we begin, let's get a show of hands. Who here invests into ETFs? Raise your hand. Okay, a few amounts. Who here has invested into QQQ or has heard of the name? Raise your hand. All right, so we have a very sophisticated crowd. Tom's very happy. You've done most of the work for him. He doesn't need to sell the product anymore. But this panel, we're going to talk about innovation on NASDAQ. So we're going to start off by sharing a few interesting stats. I was a trader before joining Bloomberg, and NASDAQ was actually the first fully automated stock exchange in the world. I didn't realize this, but NASDAQ also stands for National Association of Securities Dealer Automated Quotation. It is the second largest exchange in the world. And in 2026, they're soon going to launch a 24-hour trading system. So you can start trading on the NASDAQ from the Asia Open all the way to the US close. And this will be the first ever fully automated 24 hours trading exchange. And so with that, we have David here, who is head of index research. Now, Tom mentioned QQQ. It ultimately tracks the Nasdaq 100. I don't know if you guys know, but the Nasdaq 100 is celebrating its 40th anniversary this year. So very exciting. So David, what can you tell us about the Nasdaq 100?
Yeah, sure. And I really like your fun fact about the full name of Nasdaq because it's always the trick questions within our annual events. and like maybe half of the people get it right, to be honest. I'll just start very quickly with us. We established the exchange in 1971, and as you said, like the first fully electronic stock market. So we are really like an original disruptor in the market that we launched. And fast forward today, like 8 of the 10 largest public companies in the world are listing on Nasdaq. So for Nasdaq 100, as Tom has nicely like summarized and concluded, like we are far more than just a tech index, because the definition is more about we are capturing the largest 100 non-financial companies in the Nasdaq stock market. So for all those new economy sectors, tech, consumer discretionary, healthcare, like we got almost 85% of weights in this index. And I'll just take an example. We can also find innovators in the healthcare sectors like Intuitive Surgical. Like they are like a leader in the robotic surgical field, and also with their launch of the latest Da Vinci 5 systems, is getting traction these days. And just one more point, it's more than an American story. For Nasdaq 100, we also capture the international companies that is listed on the Nasdaq Stock Exchange. One of the examples is Shopify. It's the second largest Canadian firm. They're providing tools and also payment solutions for global e-commerce merchants. So they just transferred their listing to the Nasdaq in March recently, and they get into the index.
So if we think of the Nasdaq, oftentimes everyone thinks of technology, but as you mentioned, healthcare, consumer discretion, and communications is a big part of the index. What some of you guys may not know is oftentimes a lot of these companies, when we think of Apple was considering where to launch, and back in the day, they actually chose Nasdaq because they wanted to go away from the norm. They wanted to go with the one that was more creative. And I don't know if anyone follows Michael Jordan, but it's kind of like when Michael Jordan went with Nike as opposed to Adidas, because Adidas was the up-and-coming shoe brand, and Nike, was still the very small person. And then now, Nike is significantly bigger than Adidas. So that's the kind of analogy between Nasdaq and the New York Stock Exchange. But if we look at other sectors beyond tech, what do we see in Nasdaq?
Yeah, I'll say I really like this because we can also think about the second order effect with all the AI transformation is doing. And one of the sectors that is also in Nasdaq 100 is the cybersecurity firm, because they have both the growth and also the defensive elements. We are seeing like the use of AI by cyber criminals and also the cybersecurity teams. So let's say for the ransomware attacks these days, it's actually getting much cheaper or easier for the cyber criminals to use because of the rise of these the ransomware as a service model. And when you look at some of the most basic plan of the cyber attacks, of the ransomware attack, it could be as low as $40 per month. So that's just like you're subscribing to Netflix for these cyber attacks criminals. So you can get, it is easier, more automated, more personalized for the cyber criminals to launch an attack. And then at the same time, we also see the cybersecurity team, they are also able to respond to the threats more quickly and at a better accuracy due to the use of the AI technology. They are able to respond these really quickly. So with all this greater intensity and also the frequency of attacks, so that's why it's very natural for the need for cybersecurity solution will increase as well. So essentially, I'll say for every company with valuable data, investing in cybersecurity is just like paying for utility bills, water, or electricity. It's a must, essentially. And just one more topic is about robotics. We're seeing like the robots are getting smarter these days. They're better explaining themselves. And the magic ingredient is, of course, about the AI, the latest multimodal AI models. So we've been seeing the robots, they're able to learn by imitating the behaviors in both the physical and also the virtual world. So this is very important. And another driver is also the reduction in cost. We've been seeing some predictions that for the humanoid robots, those robots that resemble human in shape, they can decrease the cost by more than over 50% in the next 5 years, according to some estimates. So we've seen both these factors can really drive this industry.
So I definitely think that in terms of how AI is being adopted right now, it's definitely more and more prevalent. And just yesterday, I was looking in the terminal. I don't know if you guys know this, but inside the terminal, there's actually a function that will automate whatever it is you're reading or whatever page you're looking at. So if you're looking at a ticker, you can type in AI, and then it'll give you a summary of that page. So even within Bloomberg, we're using it on a daily basis. And so I think as we look at the Nasdaq 100, there's a lot of companies that are more than just that company. For instance, if we look at Amazon, they own Whole Foods. Whole Foods is a grocery store in the U.S. If we look at Google, they own YouTube, so social media provider. And so a lot of these companies are more than just tech. And if we look at cybersecurity, healthcare, those are definitely areas that we're going to see grow. So we can't leave without talking about the U.S. market. What's your outlook for the U.S.?
Yeah, I think we're seeing a lot of uncertainty that is because of the macros or the policy making. But then I guess ultimately we need to focus on the bigger pictures, right? The investors will look at the fundamentals ultimately. And for the U.S., it's still the largest market for the innovations. We have the largest pool of companies with growth and also profitable companies. And this is really essential. And you also want to invest in a market, in the jurisdictions that you are most likely to be rewarded, and because of all this structural advantage of the US. And let's also talk about some figures. For the first quarter, we've seen the earnings growth of the Nasdaq 100 companies. It got a growth of 21% year on year. And that's the third consecutive quarter that the index is achieving over 20% growth. And what about in the future? Even with all those uncertainties, the analyst community is still expecting a 15% earnings growth for the index. So this is still outperforming the rest of the broader US market or the European market. And lastly, I think for the AI transformation, it's going to be broadening. So for the large cap companies, no matter in the tech, consumer, or healthcare, they'll be able to benefit it in terms of the productivity gain and also the reduction of costs in automation.
So I think if we look at the Nasdaq 100, celebrate 40th anniversary, to what David was saying, the performance is double digit. It's almost 15% year-on-year return since its inception 40 years ago. And as Tom was saying, it's close to double the S&P 500 return. So it's done phenomenally well. What do you want investors to take away about, if it's one thing that they remember about the Nasdaq, what is it, David?
I'll say it's really important to keep on investing, because if you look at all those financial crises, the rebound of the index is really impressive. Even for during the COVID-19 pandemic, for the initial phase, there was around 30% drop in the index. But then if you want at the forward 1 year or 2 year rebound, it's really impressive and has been outperforming the broader market in general. So it's more about the resilience is also an important factor for the index.
So with that, remember, keep investing. Nasdaq's your go-to choice, and QQQ is the one that's going to bring you returns that beat the benchmark. With that, please give a round of applause to David.
Hey, thanks, Rebecca.
Please welcome to the stage Connie Leung, Senior Director, Regional Industry Leader, Asia, Worldwide Financial Services at Microsoft, and Esther Wong, Founder and Chief Investment Officer at 3 Capital Investment, for a conversation with Bloomberg's Sonali Basak.
Thank you guys for having us, and thank you for joining today. A few things that I really took away from the prior discussions also is that whole idea of spending that 11th dollar on innovation. I might use that in my own day if I could. And also this whole idea of the Nasdaq 100, it's interesting. I just took a quick look. Microsoft, for example, is one of the best performers this year, and it's non-financial companies, so I'm very interested to learn from you what a big technology giant is doing for those financial companies on the outside. Esther, I know you're focusing on a lot of the upcoming innovation as well. Let's start at home base, though. I've spent more than a decade as a financial correspondent at Bloomberg. I'm really interested into knowing what is the cutting edge right now. Everyone is talking about generative AI. To the companies that are spending their 11th dollar, they're going to want to do that efficiently. How are they doing that, Connie?
I think technology has always been the forefront, right? So I think, for my 12 years at Microsoft, we have been helping our organizations, the customers from financial services perspective, which is banks, insurance, and capital markets. It's really how they digital transform. I would say before GenAI came into the play, it will be how you actually empower your employees to work closer together, to collaborate, and to make your workplace more efficient. And then also on your operations side, also on your middle office side, from the front office to the middle office for credit control, and also modernizing your core. So I think all of that evolved technology. And I would say fundamentally, there are key cutting-edge technology that has been in the market. So one is cloud. So cloud computing is making it more agile, more cost-effective, moving from a CapEx to OpEx, so we're making it a very economy of scale. The second one will be on data and AI. I think data and AI has been, I remember the first article I wrote was 10 years ago, right? Data is the new currency, and we still talk about data and AI today. So I would say data and AI, and then in between there was blockchain and all these crypto, and then I think the fourth one will be now Gen AI. So I think these are some of the cutting edge that I think our customers are really adopting, embracing, and actually driving the efficiency as well as competitiveness and driving growth and business outcome.
How do you think about efficiency, Esther, when you're in your role, when you're looking for what is on the cutting edge, you're looking for what's going to be that standout company in the future? Yeah. But at the same time, we had that DeepSeek moment this year, and it was learned that perhaps AI can be done more efficiently.
Absolutely.
What did it mean to you?
So I think when it comes to cutting edge, there comes two separate parts, right? One is to see the part that you guys can feel it, right? So I'm sure, 3 years ago, nobody really heard about GPT, and now everybody has a chatbot, right? So that is the part that's happening. You hear a lot about different kind of chatbot, different kind of model, different kind of use, such as, robots and EV, right? That's one aspect of it. But to me, the more exciting part, the real action, actually happened behind the scene, i.e., how this AI is being produced. So a little bit of my background. So before I started my current AI VC, I was running the head of investment for SenseTime. So SenseTime, as you based in Hong Kong, we know that is one of the larger China-based hyperscaler. So during my time there, apart from investment, we did something quite interesting. At that time, we built Asia's largest AI data center. Now, think about it, right? In the process of building the AI data center, we actually encountered a lot of problems. So a lot of things that can be done significantly more efficient. So what does the AI center do? AI center is the one that produces compute. So you can think of it as an AI factory. So you can think about how the factory, any assembly factory has moved from 50 years ago to these days is a very different factory. So is AI factory. From 5 years ago to now, how AI is produced is dramatically different. Now, all of you here are investors, so you guys all know that NVIDIA share price went up 30 times in 5 years. And the reason is because GPU happened to be the component that can do AI training. Now, however, this is the year, 2025 is the first in the history that the majority of the compute produced is going to be used in inferencing, i.e. to users, than to training, right? Training is with 20 companies in the world like Microsoft and Google and OpenAI and Baidu, but inferencing is done by 8 billion people, every single one of us. So this is the pivot year. So how should we do inferencing more efficiently? I mean, of course, NVIDIA will always be there, right? But apart from NVIDIA, there are ways to do it more efficient. So one of the cutting edge things that we're thinking of, and I think David mentioned robotics, right? Why are we not seeing a robotic cooking and cleaning for you right now? Why are there so many robots in factories, but how come there's no robot chefs for now, right? One of the major issues is because the world lacks these kind of multimodality data. Think about it, right? LLM is only when you input stuff. So of course, these are structural data, but think about a robot. A human being can actually have all kinds of senses, sense of smell, sense of touch. All these are not part of the algorithm right now. So how do we actually make robot a potential reality? The way that I'm thinking, and this is what we're incubating, what we're investing, is actually biocomputing. So can we use our brain cells to produce a chip? Now, this might sound like science fiction for some of you. I had a chat with Ed previously. He said, are you sure this is happening? The reality is that it is. In fact, in our lab, right, for one of my portfolio companies, it takes a mouse neuron 5 minutes. 5 minutes from a mouse neuron, it can play Pong, you know the computer game Pong, better than a silicon-based chip. This is the power of biocomputing, and I think that's one aspect that I think is the next step of inferencing. So it's a very long-winded answer to your question.
No, but not at all. It's funny, I just learned to play poker, and I was worried about AI there. And so a lot of other things to be worried about, although I do appreciate using AI at work. Speaking of that, there are so many ways financial companies are starting to use AI. You know, before we get into all the opportunities, what are some of the limitations still? There's a lot of regulation. When I talk to the big banks, there's always concerns about data. Yet, while that might have been a concern a year ago, you see them opening up at a dramatic speed to different forms of LLMs.
Yes.
How does that look?
Yeah, so thanks for the question. I think the key thing is, you know, the environment, right? So that's to your point, particularly for financial services industry, we are highly regulated. So some of the key areas that people will be concerned about will be security, privacy, and compliance to the regulations. And covering from Asia perspective, each country will have their own regulations, like Hong Kong, Singapore, and other countries. We have to understand what's the regulations about. And the fundamental on the regulation side is about your risk assessment. So as an organization, whenever you're adopting a technology, it's not just the technology itself, it's the entire end-to-end. How are you engaging with the customers? How are your employees running or using different systems to actually serve the market or create new products? So all of that as an end-to-end cycle, we have to assess the risk management. And I think that's the part which we need to do a better job in advertising and also to discuss and share, socializing it with the regulators. For the past 12 years, what we have been doing at Microsoft is we actually have engaged with a lot of the regulators globally and on a one-on-one basis to actually let them understand what is cloud computing versus traditional outsourcing, because that's where most of the regulation guidelines is about today. And from there, I've seen a lot of regulators, including Hong Kong and Singapore and others, that they have actually updated their guidelines and issued new ones so that our customers and the industry like partners who can develop into this platform and launch new services, which is compliant to the latest guidelines. So that's one. The second thing about Gen AI, so for the last 2 years, our conversation with regulators have basically around Gen AI, what it is not. I think it's very important that Gen AI is an LLM, and it's not a data analytics. So it's not something which is coming up with a data algorithm and all of that. So it's actually a language model to do summarization to help as a normal person, right, to adopt technology in a much economic way and easier way. So data definitely is an important topic for the regulators, and data needs to be secure. So from our cloud perspective, this has been our bread and butter. So it's not something about Gen AI that we need to specially protect your data. We have always been protecting data. So that's why I think when Gen AI come about, our customer can easily adopt this technology because it's under the same security framework. So the data belongs to our customer. We don't have access to your data. It's fully secure. You have access. Every encryption is done by our customers, and we don't own your data. So I think that is something that we will continue to engage with the regulators. But so far, Gen AI is something that you can deploy already under the current jurisdiction.
It's interesting. There are a host of questions I wanted to ask about the cost of AI and the efficiency as we started to talk about, but we're going so far into the use cases, and it seems pretty futuristic already. Taking brain cells, you said, and being able to make new uses for them. What can you not do today, Esther, that you wish you could do tomorrow with this technology?
I think of AI as, if you look at the 5,000 years of written history, each era or each dynasty is defined by technology. So you have the Bronze Age, you have the Industrial Revolution, you have the Internet era. So the next era is AI, right? So I think of AI, and if you look at the history, every technology serves one major purpose. That is equalization. It makes people more, it gives people more tools so that the less will have more. Okay, so when you think about AI as the big equalizer, what are the current industry that is most inequitable? Think about it, right? That could potentially be cured by having access to AI. And to me, there are two sectors that really stands out. One is education, right? Think about it, right? If you have kids, some of you already subscribe to, let's say, Khan Academy, which is a fantastic program for the kids to learn STEMs and all kinds of knowledge. The kid from India versus US from Hong Kong, they can have the same level of tailored AI tutor. How great is that, right? So that's one sector. Another sector, which holds very dear to my heart, is healthcare. Because healthcare, with access to healthcare and without access to healthcare, the difference is literally life and death. Now, with AI, there is a lot of agentic AI that is be able to collect all the health data of a particular rare disease, right? A lot of times when you have rare disease, you're pretty much screwed. Think about it, because there's not a lot of use cases. But with AI, as a matter of fact, even with this rare disease, there is potential to cure them. I mean, I personally strongly believe that within the next decade, we can cure cancer. Now, this year's Nobel Prize in chemistry, 2 of them went to AI. Why is that? The protein can fold. They can predict how the protein fold. And more interestingly, when the protein is folded, you can reverse engineer the process. You know what is protein? Cancer cells are proteins. So we can potentially cure that. And this is all within our reach. So it's no longer just about fairy tale when they talk about biocomputing or curing cancer. I think it's actually very doable.
Although I can't wait until I'm talking more on television about humanoids and robots. So I'll wait for that moment. You'll see lots of those in finance, but for me, myself, I got my degree in quantitative finance. I love AI. I love big data. What are people doing now that you find on the cutting edge? How are your clients using Gen AI to move the needle? There was this great report your team had shared with me with 31,000 companies saying how they use AI. Some people get scared, right? Some people say they're going to take my job, but the people who say I'm going to use it are tending to be the people who get ahead.
Yeah, so you mentioned about our workbench index, right? So I think what the analysts came out with the report is the importance of really having human and AI working together, the collaboration, and what AI can bring, right? So I think we talked about the AI. So I think AI definitely can bring productivity, but also creativity and innovation, particularly to our industry. And the other thing is AI is also a very good tool for skilling and learning, right, for our organizations. The other thing that the report come out is 80% of the APAC leaders really planning to use an agent in the next 12 to 18 months. So AI is here. In terms of usage, there's a lot of usage right now for Gen AI. Some of them are low-hanging fruit, which is really just Copilot. So I mean, we just announced earlier with UBS launching Copilot for 50,000 of their employees, and about this week we have Barclays, which is doing even more. 100,000 of the employees is going to use the Microsoft Copilot. And what they do is really content search, very simple. Can I claim my leave? How much leave balance do I have? I mean, this simple question, you always have a human to do it. Maybe now you can have an AI to automate that process. And then the other thing is like an AI agent, AI assist. So today I would say the first level is human having AI assistants. So the AI assistant can be on your day-to-day job, like helping you draft the email, summarizing the team meeting, so you don't have to listen to an hour recording to figure out maybe the last 2 sentences relevant to you, but you invested an hour, now you can just read it in no time. The other one is really about the servicing, so contact center. We have a lot of contact center usage where a typical search may take 4 minutes, now it's 30 seconds, and that's done by Prudential. And then we have people like Moody who's telling that most of the time they can save 80% of their data collection if they use Gen AI, or they can have 50% saving on analytics. So I will say self-servicing and robots or virtual assistants on the web for serving your clients. So I think there's a lot of use cases already. I would say the more advanced one will be on the fraud, particularly in our industry. So fraud detection is something that we're looking at for our advanced workload, but there's plenty use cases in the industry right now.
Yeah, I will say for myself, I don't think I would have become a television anchor if I didn't have Bloomberg AI reading my regulatory filings for me. So I appreciate it. Esther, so going back to that question about cost, what's been explored this year is this idea of the trillion some estimated dollars looking to go into AI data centers, power needs. I've seen many estimates on how many trillions that might be over the next 10 years. Do you think that it's overstated, or do you think that those grand estimates are correct based on the cost it would take to get to these big dreams that you've outlined?
I think if we produce AI the way that we used to produce AI, then there is no end to how much astronomically people can spend, including Microsoft, right? Microsoft spent like 30 billion last year in R&D alone, and even more in buying chips. So, however, I think what I'm trying to do, or what I think the next frontier technology is how can we produce AI differently, right? I just talked a little bit about biocomputing. The beauty of biocomputing is that the human brain, your brain, doesn't need to look at 1,000 pictures of a dog to know that the 1,001 picture is a dog, right? The computer needs to do that. So basically, the token is very heavy when it comes to a regular GPU use. So biocomputing is one way to lessen the cost. Another way to lessen the cost is, how about we build data centers not on Earth? Because in my experience dealing with the building data center, we have to get a license from the government, we have to buy the land, we have to build a building, and then once the building is built, 50% of the cost went to cooling the GPU themselves. What if we can do it under the ocean? And even better, what if we can do it in the space? Now, this is not as crazy as it sounds, because if you think about it, in space, energy is free. Solar energy is free in space, okay? 99% efficiency versus 13% on Earth. Secondly, cooling is free. Space is minus 250 degrees, right? You don't have to worry about cooling that much, where radiation is very easy in space. And also maintenance, there's no oxidation in space. So whenever times the GPU breakdown is always because of heat. You don't have that issue at all. So can we think about how to create AI differently so that we can save a lot of costs? Because guess what? I think Jensen is right, and from NVIDIA. He said the token for inferencing is literally 1 billion times more than the tokens for training. And this is the year, if there's one takeaway for you guys for this lunch, I hope so, is this is the year that inferencing surpass training. So this is the pivotal year that we're going to think about alternative ways to produce AI. And so this is what, my job is now dedicated to this area, which I find super exciting.
I think I would prefer my data center to live on another planet than myself. Hopefully the world goes that way instead. Connie, what is the biggest question that you get from clients?
How do I get started? And I think the key thing is just start anywhere, because Gen AI is for everybody. It's any employee that you have, from whether you're working as a frontline, you're working as a servicing, whether you're working in the middle office or back office or IT operations or support maintenance, get started. Get your hands dirty, understand what the technology can do, and then rive up, because it's an evolving. And as I said, today's technology is available, regulations are available. It's quite cost effective because it's pay as you go. And also, I think it's about how do you use AI to reimagine your business process? Because at the end of the day, it's about people, process, and technology. And the art of how you actually evolve the three together, and that also includes human, is how to use AI smartly, so that you can actually, as I say, work smartly, but then you can also innovate quickly, and then you can also bring the business value quicker. So I think those are the three things that today's environment, whatever technology you're looking at, is Gen AI, data and AI, or as I say, cloud, I think this is where people need to get started, and then, there's no limit to it.
Very notably, one industry we didn't talk about was software. There's been a lot of discussion over at Bloomberg from a lot of investors on what will win, what will no longer exist. What do you tell people, Esther?
I think the job of a programmer would become obsolete, just like when the Industrial Revolution came, the job of blacksmith is obsolete. However, 70% of the job right now that we have today did not exist during 150 years ago. So we cannot imagine what new job AI would bring, but I can fairly confident in saying that the job of a lot of the fundamental repetitive jobs, such as programming, such as lawyering, such as accountant, those jobs would not be here anymore. This is for sure it would happen. So the next questions I get all the time is, then what should my kids study? Now, because I'm a parent too, right? So what should my kids study? You don't know what your kids can study because the future is so far beyond, right? Think about it. You are limited. If you tell your kid what to study, you're limited by your own knowledge. So the way that I'm training my kid is that, listen, you just have to be very, very good at learning new things and be super comfortable in accepting changes and go a little bit beyond your comfort zone. So that is actually very important, and I cannot emphasize that strong enough. Be very comfortable to go out of your comfort zone.
I feel a little less guilty for only taking 1 year of coding. Thank you. Thank you both for your time, Esther and Connie. It was so nice to talk to you. And that wraps up our lunch program for today. Thank you all for joining us here in this room. And a big thank you to our title sponsor, Invesco QQQ. Remember, the plenary sessions will be downstairs in the plenary hall at 2 p.m. And we look forward to seeing you there. Looking forward to another round of discussions for the afternoon. Thank you. Thank you. So lovely.